All right, welcome guys. So we're going to be talking about NVIDIA earnings today. So NVIDIA earnings is coming up. How do we trade NVIDIA earnings? There's two things to look out for. There's the core position. There's also the event sleeve. So we're going to be diving into how a professional trader looks into reading NVIDIA earnings, how to position yourself for it, what to do if the stock goes up, what to do if the stock goes down. And it's all about how you're being sized. Let's dive into it. So when it comes to trading any types of earnings, there's always two types of positions. Every position has two types of things. There's the core position itself, and then there's the event sleeve. When it comes to the core position itself, that's basically your long-term conviction and your long-term bet on the stock. It's the size that you would basically take on any stock you would hold through drawdown, through volatility, through any noise, and you're just like long-term bullish or bearish in a particular position. The event sleeve type of position is basically additional extra exposure that you're willing to take into this market based off some binary catalysts. So those could be earnings, it could be product launches, it could be macro events. You're trying to capitalize basically on a big move and not literally survive any drawdown, basically. So the main catalyst that we have coming up right now is May 20th. May 20th is NVIDIA's next release date after the market close. So before anything else, the framework demands one question that you should ask yourself. And the question is vol cheap or expensive relative to historic norms, right? Vol means volatility. Is the volatility cheaper than what it was before, or is it more expensive than what it was before, right? That single answer will determine everything of how you should be positioned or how you should be sizing into these earnings, into these event leaves that go into a signal point, right? So the vol signal, right? There is cheap volatility and then there's expensive volatility. When vol is cheap, it's basically the market is underpricing the potential move. It's a signal it's a signal to increase the events leaf, right? You're getting paid to take on binary risk at a discount, and that's honestly a gift. So whenever volatility is cheap, you're getting paid to get in at a discount. When vol is expensive, like market is potentially overpricing uncertainty, right? It's a signal to potentially trim in an events leaf, sell the fear premium back to the market and keep the core position, but reduce your binary risk, right? So right now, where do we sit in terms of vol, right? So in normal conditions, NVIDIA tends to see its implied volatility sitting between 40 to 55%. And as of right now, the vol is getting bid right back up, spiking it towards roughly 70%. You might be asking, why would volatility spike and how do I determine whether it's going to spike, whether it's for NVIDIA or for anything else in the future, right? So three things that you should look into. The first one being the most traded options, right? So volatility is exploding because there's a lot more activity that's coming into the options market for NVIDIA itself. So there's a lot more actively traded equity options in the entire market for NVIDIA. They have historically had massive post-earning moves. So like post-earning moves of roughly 10 to 20% have occurred in recent quarters, where it's either gapping up 10% or gapping down 10%. It's been having a lot of volatility associated with it. And then finally, AI exposure. So every institution, algo, retail trader with AI exposure is watching this print. Why? Because the AI market is kind of like the dot-com bubble where a lot of these industries, a lot of these tech companies were getting bid up crazy heavily or even slapped straight back down because of all the AI hype that's going around. Lastly is recently Trump went to China and took Jensen Huang with him over there. They had massive deals with NVIDIA now supplying a lot of these Chinese manufacturers like Huawei and so on and so forth. So NVIDIA's got a lot of news that's coming up into its earnings and a lot of potential deals on the table that could create this increased volatility for its earnings right now. So the bar is already high, like we've mentioned, and it's moving even higher. 79% is a key number to be aware of. That's the analyst's estimated revenue growth versus the management's own guide of 77% in Q1. So analysts are basically people that work at banks and they are knee deep in research papers, knee deep in spreadsheets, trying to figure out where do they think NVIDIA's growth is going to come from. Management says we're going to grow 77%. Analysts are saying 79%. So analysts are already expecting a beat by 2%. NVIDIA's growth is already, it needs to pop. So NVIDIA's needs to most likely exceed the threshold of post-earnings rally. So like 80% plus. If they can get 80% plus, they've exceeded the expectations. And then again, the own guidance is basically the revenue guide for Q1 2027 is set to be $78 billion. That's NVIDIA's own guidance, driven primarily by data center growth. We want to be aware and watching that number. So if that number changes, if it's lower, that's very, very bad. NVIDIA could take a massive hit. If it's higher, that's even, I mean, NVIDIA could just spike up. Right now, NVIDIA is the most, I guess, it's the largest company in the entire world. It's literally larger than every country's GDP except of China and of the United States of America. Um, so a beat currently is already priced in. Wall Street already expects Nvidia to exceed management guidance, meaning the stock needs to beat the beat move to basically even go even higher than that. Is that going to happen? That's rough. Nvidia's all-time highs right now, it's $5.5 trillion. It's the largest company in the entire world. And they need to beat another beat to go higher. That's a tall order to do. Which might kind of put us into a downturn, right? But now the only thing that might happen, the only thing that could potentially make Nvidia jump higher is the China wildcard, right? So Nvidia's China wildcard, which literally happened like last week, where Trump and Jensen Huang went to China and kind of like tried to strike some deals over there, is that Nvidia assumes that in Q1 of 2027, their guidance is basically going to be no data center revenue growth for China, right? So China is a wild card that nobody's planning for. That's primarily because all the tensions between the US, Trump, and China, Xi Jinping. But we don't know. We don't know what conversations were being told at this last event. And I think it might have been good conversations. So if they do expect potential revenue growth, and if there is a deal that was struck whilst they were there, NVIDIA could go higher. That's some unresolvable uncertainty that is in the market. Now, I don't think, in my honest opinion, in my experience, I don't think that they will release that news as early as Tuesday. It's a bit too premature to say so, in my honest opinion. So, as of right now, the only thing for you guys to look at is basically, are they going to beat the beat? Are they going to beat the expectations of the analysts, right? So the trap is basically when the beat isn't enough. So they could beat the earnings, right? The bar isn't just high, it's just moving. So market expects a beat on guidance, strong data center numbers, continued AI dominance, and that's the consensus as of right now. But a shock could basically happen is basically if the stock has revenue growth of 80% plus, like, or China upside clarity, or a guidance that is meaningfully exceeding the bar of Wall Street, that could shock the market and then push this thing even higher. They're already pricing this thing. As you can see, price of NVIDIA is probably pumping as of last week. It hit all-time highs last week, and all the news kind of happened. So my expectation is it's going to be a very neutral one when it comes to NVIDIA itself, just because of everything that's going on, and there's no need to be positioned at the very highs at this current rate. I personally believe 5.5 trillion is probably overvalued, in my honest opinion. That's my take on it. So the playbook for this is basically, if you want to get into the market, right? So you assess the vol, you size the events, and you hold through the conviction. If you hold NVIDIA with clear high conviction on a directional move, like the expensive vol is potentially your exit ramp, right? So like as the volatility increases and you get in early and the volatility pushes up. So if you want to get in like a few weeks before, and then the volatility increases from 70 to like 80%. So for example, say this video is getting released on Sunday, May 17th. The event is on May 20th, 3 days later. The volatility might increase from Monday's open all the way till May 20th, right? So we just want to be aware of, like, you can probably get in early on Monday and then maybe exit even before the earnings even hit. So you can take advantage of some of the vol that's going to be increasing here. So let someone else overpay for the uncertainty. The stock will either be there, like will still be there when the dust settles. So don't worry about missing out on a potential move. Bottom line is you check the volatility first. Is the implied volatility cheap or expensive compared to historical norms? That's the only question that is basically that matters the most before sizing. And then lastly is trim the events leaf, right? So if vol is expensive right now, sell the market's fear back into it. So you can sell options essentially. Don't add binary risk if you wanted to. And then keep your core position. If this isn't bearish for NVIDIA, your core position, managing your core position is probably key. So your conviction can stay and oversized risk should just go away. Like you should not be oversizing into this play. Hopefully this gave you a quick understanding of what to look for NVIDIA earnings. And if you have any questions, feel free to hop in the Discord and let us know. Thanks, guys.